Hi, this is Alessio Rostaniov, Leading Trader. In this video, I'm going to share with you something incredibly important, and I think you'll find this fascinating and interesting. And what I'm about to share with you are the three most important ingredients, or shall we say the three most important rules in finding a winning and profitable trade. And let me just say that you can apply these three rules to anything, not just the financial markets, but you can also apply it to something like a game of sports. For example, football, rugby, American football, or my favorite game, as you can see here, ice hockey. Now, let's begin with rule number one, which is we need to find a strong market. And this could be a market that is strong fundamentally or a strong market technically. Now, personally, I prefer to look at the technical aspect. So what I'm looking for is a strong trend or momentum, or what I like to call superior momentum in a market. And what I want to do here is compare it to a game of sports. Now, I'm going to compare it in this example to a game of ice hockey. Now, why ice hockey, why not football? It doesn't matter. You can do it in football as well. I do like soccer, but I don't really follow it that much, except in the World Cup games. But my favorite game really is ice hockey, and the reason is it's very simple to understand, and to me, it just makes more sense. And what I like to do in a game of ice hockey is to bet with the strongest team, the most powerful team out there. And that, as you can see here from the schedule, my favorite team here is Washington Capitals. And you can see why. Washington Capitals have a point scored of 94 in 2015-2016. That's very high. In fact, it is the highest in this schedule, as I'll show you. And also has a very high win rate. And if I just show you here, just scroll down, you will see that the other teams don't come as high as the Washington Capitals. There is only one team that comes close, it's Dallas Stars, and they're very good as well. But I like to bet with the Washington Capitals, one of the strongest teams out there. Now, as you can see from this chart over here, you'll see also the Washington Capitals have one of the highest winning percentages. Okay, so now we've covered point number one, which is strength or superior momentum in a trade or in sports. Now we're going to come to point number two, which is timing. All right. Correct timing and execution of a trade is absolutely crucial, not only in financial markets, but also in sports. So, for example, in the financial markets, what I like to do is I like to wait for a pullback. We never buy at the peaks of a market. We never chase a market higher. What we like to do is wait for the market, wait for the price to come back to us, which is why I have this blue line, this 21 moving average you see here. That's a 21 exponential moving average running through my chart. So what we never do is we never chase the market higher. What we like to do is instead of buying the peaks, these highs, instead what we do is wait for a pullback. Okay, so we wait for a pullback. Let me just change the color of that. Wait for a pullback to the 21 exponential moving average, then we buy here. Okay, so we buy these pullbacks. So what we're doing here is improving the odds in our favor. And that is counterintuitive because essentially we're entering the market when the market's actually going against us, when the price is going against us, if that makes any sense. However, it's important to appreciate that we only enter as long as the price is above the 21 exponential moving average, not below it. Now, this is where it gets very interesting. You see, in the game of sports, like in ice hockey, or in fact football or rugby or American football, we can apply the exact same rules. You see, the same rules we apply to trading or financial markets, we can apply the same rules of correct timing, trade execution, and risk and reward to a game of sports, in this case, ice hockey. So here we have a simple example. This is actually a game that I placed a bet on just recently, which is between Washington Capitals and LA Kings. And again, remember, I personally always bet with the Capitals because in my view, they are the strongest team with a high percentage win rate. So as you can see here, let's take a look what happened at the beginning. You'll see at the beginning of the game, all right, when the score was 0-0, so as you can see here at the beginning, nobody had scored. You can see the odds for the Capitals to win was, well, it says 2.15, but actually it's 1.15 to 1. Most bookmakers, what they do is they add the number 1 to the fraction. All right, what you have to do is subtract 1 to get the correct ratio, the correct profit ratio, which is 1.15 to 1. Now that is a rubbish RR. Why? Because that means you're risking $1 to make $1.15. Okay, that is not a good risk reward. If you're going to risk $1, not just in sports, but also in the financial markets, you need to make 2 times or at least 3 to 4 times that. I actually prefer if it was more than that. If you could risk $1 and make 5 or 6 times that. All right, so this is a very bad risk return, 1.15 to 1. Let's just forget that. Now look what happens next. We wait, what we need to do is wait for the odds to improve. And usually that happens when the opposing team, in this case the LA Kings, score. All right. Now, one thing you have to appreciate about the game of ice hockey, which is that the game is divided into 3 periods, as you'll see here. Okay. So the periods are, as you can see, this first period, the second period, and the third period. Okay, each period is 20 minutes long. And what we need to do, as soon as the strongest team here, in this case the Washington Capitals, as soon as they're down by 1 point, as soon as they're losing by 1 point, and ideally before the third session, what we're going to do is place a bet on the Capitals. All right, so as you can see here, look what happens here. The Capitals are down by 1 point. The LA Kings are winning here, as you'll see. And look what happens to the odds. The odds go from 1.15 to 1 to 3 to 1. Now it says 4, but you got to subtract 1. Okay, it's 3 to 1. That means $100 returns $300 profit. Now we're talking. Now look what happens next. As time goes by, especially when you go to the second period, when time passes, you'll see the odds continue to get better. In this case, the odds in favor of the Capitals winning is now 4.5 to 1. Okay, 4.5 to 1. So $100 returns $450 profit. Now look what happens next. In the second period, the Capitals come back in with a goal, and then they win the game in the third period with 2 more goals. So altogether, the Capitals win the game with a score of 3 to 1. Let me show another example. This is a recent game between Capitals and New York Islanders. Now look what happens here at the beginning. At the very start of the game, we do not want to place any bets. Okay, why? Because the risk return is terrible. So as you'll see at the very start, when the score is 0-0 between both Islanders and Capitals, notice that the odds for Capitals, the Washington Capitals to win, is 1.6 to 1. That's a rubbish RR. But as soon as the Islanders score and the Capitals are losing by 1 point here, and that happened the very first period as you see here, notice the odds improved significantly in favor of the Capitals. So that became 3.2 to 1. So $100 returns $320 profit. So in this example here, you see the Capitals against Arizona Coyotes. And again, remember, at the very start of the game, when the odds are 0-0 or a draw between the teams, you'll see the RR, the risk return, is terrible. 0.8 to 1. That means you're risking $1 to make less, to make 80 cents. That is not a favorable or good risk reward. So we won't place a bet. And what we're going to do is wait for the second period. Okay? And you'll see what happened here. The opposing team, the Coyotes, scored. The Caps are now losing by 1 point, and as you see here, the odds improved. Became 2.4 to 1. Now we're talking, and now we place a bet on our team. And final example here, as you'll see, is between, this is a recent one, between Minnesota Wild and the Capitals. Again, at the very start of the team, who scores? The opposing team. That's good, because now the odds become 3 to 1 for Capitals to win. That's a good risk reward, and that's what we need. So $100 returns $300 profit here. And as you can see, this is what happened by the end of the game. The Capitals won the game with 3-2. So this is one of the most important reasons why we need to be patient and wait for the price to come to us, for the risk reward to improve, which is why we wait for the market here. So instead of buying these highs, these peaks in the market, we wait for the price to improve and we buy the lows at a better price, better risk reward, at the 21 moving average. And you can see the market then bounced off these levels and went higher. Now, something important to appreciate. You need to also know when the odds have turned against you, because you're not going to win every single time. And you need to know when not to enter the market. In other words, when not to place a trade. And that is important. What I like to do here is notice, as soon as the price closes twice below the 21 moving average, okay, let me just repeat that. When price closes twice below the 21 moving average, we close all long positions. Why? Because as soon as the price closes twice below the 21 moving average, that opens the door to a reversal in the trend and potential downside action in the price. The odds are no longer in our favor. We're no longer going to open any long positions. We're going to exit any long positions to protect ourselves against risk. Look what happens next. The market then plummeted lower. All right, so we need to know not only when to enter, but when not to enter as well. That is really important. That is why risk management is so key in trading. Not just trading, but also in sports. In this recent game between Washington Capitals and the Montreal Canadiens, notice what happened here. At the first period, you see Canadiens scored, the opposing team scored. And you can see what happened here. The odds went from 1.6 to 1. Again, you've got to subtract 1 from here. Went from 1.6 to 1 to 5. I beg your pardon, 4 to 1. And then, when they scored that second goal, went to 7.5 to 1. Now, the odds certainly were fantastic. But let me just explain one important thing. That in the game of ice hockey, when you're in the third period, okay, when you're in this session, and your team is losing, in this case the Capitals were losing by 3 points, okay? So the Canadians had scored 4, Caps had only scored 1. So they're losing by 3 points. Let me ask you, what are the odds of the Capitals being able to score 4 points in 20 minutes to win the game? The odds are very, very low. It can be done, yes, but the odds are just extremely low. And it is about odds, it is about probability. So because the probability is so low, it doesn't matter how high the odds are, how high the reward is, we're not going to place a bet here because most likely you're going to lose the bet. So as you can see, that is the same principle we apply in financial trading. So we need to know not only when to enter, but also when not to enter. All right, when the odds are against us. So when essentially the 3 ingredients are strength or power, superior momentum. Secondly, execution or correct timing. And finally, the risk return. As Warren Buffett once said, the price you pay determines your rate of return. And finally, one more thing I want to mention here is this. It's always a useful idea to hedge your trade or hedge your bet. For example, if you are long on a trade and you're buying these pullbacks in a very strong trending market, what you could also be doing is shorting a market at the same time. Now, shorting a very weak market is what I'm talking about. So as you can see here, the weakest market at the time, which was in a downward trend, was the junk bond market. In this case, the iShares iBoxx High Yield Corporate Bond, or HYG, which was in a strong downward trend. And in a situation like this, what we can do is short the pullbacks to the 21 moving average. All right, guys, I hope this helps, and I would really appreciate your opinion and your feedback on this video. Did you find it useful? Did it help you? Please leave me your comments below this video in the comment box. I really appreciate it. For more up-to-date market forecasts and trading strategies, feel free to join us on this link you see here. It is leadingtrader.com/alerts. Thank you very much indeed, and I'll see you on the next video.